please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia. And it is a red that you can see on the Asian screen as well. It looked like it is well discounted by the market. And remember, the Chinese response was more a threat on 128 products. They didn't actually levy them. But nevertheless, the Asian markets are not able to shake off that fear. And we are seeing those trade war, tit-for-tat trade worries continuing to dominate. All Asian markets are in the red. And the added worry for India will be that because of the dollar weakness, again, on growth worries, has sent crude prices above $70. That may be just $1 above what we got used to late last week, but 70 can be a psychologically important level. And predictions from Morgan Stanley and other brokerages that it could stay that way and even go towards 80 will also have to weigh on our minds much more than other countries. I want to leave this conversation with a ray of hope. Wall Street Journal reporting that US and China are going to start negotiations on participation on a wide variety of areas, from financial services to manufacturing. That could be a ray of hope. So we start in the red, but let's see if we get more news as the day, as the day wears on positive conversation on this. Perhaps we will have something to clutch on. But at the moment, red start below 10,000 appears a given.
Okay, Lata, good morning. Anuj, morning. We also have a couple of more things to, take control of this week, right? There's F&O expiry, and it's been a really weak series for us. We've almost lost 5% this series, and it's a truncated week. We have very few trading days. Yeah, well, it is for us, but I mean, you don't know with global cues the way they are going. The S&P 500 saw a 6% cut last week. I mean, when was the last time you saw such a big cut in the global markets? So I don't know how our markets would take it. Anuj, morning. Given that we have a truncated week and there's F&O expiry, do you think the bears still have an upper hand in this market?
Morning, Sonia. And just a point here. I think we actually are barking up the wrong tree if we look at the global cues for any kind of solace for our market. The fact is that our market is in a bit of a near-term bear phase within a bull market. Perhaps a bear market, a bull market correction.
No, it's a correction.
It's a bull market correction, but for those who entered right at the top, it's a bear market, right? So I mean, you can always define for those who entered at 7,700, it's a massive bull market which is going through minor correction. Yes. So it depends on your entry, of course. Look, for me, the big point is, and there's big FI buying in cash market. I don't know if there's some QIP money that's included in that, but the kind of selling that you've seen in index futures and for 3 or 4 days, that money is playing for something big on the downside. That money is not playing for 50, 100 points. Again, on Friday, FI sold 2,000 crores in index futures. The net longs are now down to 37%. This market is extremely short. Now, the issue here is this market will not run up only because it's short. Just like we discussed in the past that the market is lacking hedges, but it will not fall only because it's lacking hedges. The only thing here is that if there's any positive news, in that case, if there's some intervention or something, in that case, the potential of short covering is very huge. But that alone is not going to lead the market higher. For now, you have to respect the ticker that's telling you that there's something wrong. Even on Friday, there was quite a bit of short build-up. Friday high of 10,027 will now act as a bit of a resistance for the market. Let's see if we go there for starters.
Will 9,950 act as a support? I guess is also going to be equally important.
Let's see. For now, see, it's a 3-day expiry week, and right now the bears have the momentum. What happens in expiry week, especially if you have shorted at any point, you're making money. You're not scared by 50, 100 point rallies. You actually are looking at 50, 100 point rallies to actually create short positions. So it's a good chance that the market makes a move towards 9,700, which was the previous low, and which would complete about a 15% correction, which is normal actually in sometimes in bull market. Yeah. The bigger worry is about mid caps, because last week the mid caps went through a sharp underperformance, and that after the distribution phase, 2 or 3 days of outperformance of mid caps, and then a sharp fall. So that is, I think, a big worry. Though having said all of that, because the market is so, on the short side, intraday, and just intraday you might see some rally in good quality stocks. Like you saw on Friday as well, advanced decline started at 1:22 and we finally ended at about 1:5. 1:5 is not good advanced decline, but compared to 1:22 it's still better. So intraday there might be some stocks which may recover, but absolutely no doubt that there's a good chance that the series closes at the lowest point. and this may actually, clean out the market. And April onwards, perhaps the hope would be that the market starts to rally actually in the new financial year.
Well, that's a great hope to live with, but the kind of delivery-based selling that we have seen in the banks is a spot of bother, and it's not in public sector banks or only the corporate-facing banks. It's been across the board, but the selling in ICICI Axis is rather shocking. And adding to that list is Reliance. Reliance saw a huge amount of selling. So clearly it's not just selling banks, but selling India to some extent.
Oh, absolutely. So there was total DI selling of almost 1,000 crores on Friday, right? That's something that you must take note of. But let's start the week. It's a truncated week, right? We have a long weekend coming up, so let's cheer up. We have a lot of wise experts telling us how to approach trade this morning after the big fall we saw last week. Mahesh Nandurkar of CLSA says, with the series of steps announced by the US, concerns on an international trade war have now risen. He says while India is a small trade partner for the US, the USTR dragged India to the WTO last week, raising questions on India's exports incentive program. He believes even in an adverse scenario, the impact on India will be limited, as India's trade surplus with the US is only about 1% of India's GDP, and at the gross level, India's exports to the US is $77 billion or 3% of India's GDP. He adds the sectors, companies that could be at risk are steel, IT services, pharma, Bharat Forge, Tata Motors, Motherson Sumi and Arvind.
Okay. Well, I wouldn't say that's a worry. People have gone into this in great detail, and for being classified as someone who's manipulating currency or manipulating trade, you have to qualify on certain parameters. That is, how much should the trade surplus be? At 1%, you just don't qualify as a major offender. So in any case, that's a spot of bother. A technical call from Lawrence Belanco is important here. He says last week's price action in the S&P 500 triggered signs of a capitulation low. He says a capitulation panic low is typically signaled when the ARMS index spikes above 2 and the VIX trades +2 standard deviation above its 200-day moving average. He says on the macro side, it's worth noting that both Brent and WTI oil have managed to break out of their respective consolidation triangle patterns this week, which provide upside target of 76.4 to 76.5 dollars per barrel and 75.38, 77.23 barrels for WTI, respectively. That's a double whammy for India.
Okay, well, let's also get you some money market views, right? Because the dollar has been sliding a bit on the back of trade worries. So the rupee on Friday closed at about a one-week high or so. For today, the forecast from Pramit Brahmabat of Veracity, he says the rupee will take negative cues from the domestic equity markets. He expects the dollar INR to trade in a range of 64.80 to 65.20 for the day.
And Ajay Manglunia of Edelweiss says gilts were stable amidst the global equity sell-off, but the trade war concerns will dominate and contribute to volatility across asset classes, says domestic bonds. However, will be more focused on the release of the Reserve Bank's borrowing calendar and the fiscal year-end related market activity. Expects a 10-year benchmark bond yield to trade in a range of 7.5 to 7.56 today. Actually, last week was the best week in perhaps the entire quarter for the bond market.
Okay, that's an important take. By the way, some unusual weather in Mumbai over the last couple of days. Yesterday was very hot, and it's almost like I've never experienced almost a heat wave kind of situation in Mumbai, but that was interesting. Anyway, let's move over to Mangalam then for the world view.
Well, irrespective of the weather, it's all red on the Wall Street as well as the world market street, Anuj. And unfortunately, there is no sandpaper that can be rubbed to reverse the downswing of the markets as well. So 400 points cut as far as the Dow is concerned. All of last week, we saw cuts of close to 6% on the Dow and the S&P, 6.5% on the Nasdaq, and all three indices are now in the correction zone. Data breach worries was the big story of last week. Facebook, that stock lost 14% of its market capitalization in all of last week. Across the Atlantic, even in the European markets, we saw a sharp cut of red on both the CAC as well as the DAX. The FTSE too down about 0.5%. The only shade of green I saw was on the Russian markets. Oil above 70 doing well for the Russian commodities. That one up 0.2%, but the Brazilian markets down about 0.5%. The case is similar across the Asian screen as well. A large amount of red on all the four Asian indices, apart from the Korean markets, which are outperforming because of one software company which is up about 18-19% 0.1% as we speak. As a result of that, the SGX Nifty indicating an absolutely flat start as we speak.
Okay, thank you very much. Not very pleasant news. I don't blame you for that, Mangalam. But let's try and parse all the news that we are getting. We have an expert joining us, James Glassman, senior economist at JP Morgan, joins us on the phone line. Good evening, James. Thank you for staying up for us. Do you think that this now escalates even more? We have markets continuing to fall on fears of trade war. Now, I'm just trying to look at two positives. One, the Wall Street Journal reporting this morning that there are going to be talks between the US and China on trade and on sharing. As well, China has only threatened. They have not yet imposed any tariffs. So do you think we are at the end of the war of words, or at least something constructive can come?
Yeah, I think this fear of global trade war is really exaggerated. This is really a story about tensions between China and the U.S. and complaints in the U.S. about China's technology transfer, intellectual property rights. So this is really focused on an ongoing dispute between the two countries. And I think we're going to find trade is a two-way street here. It's not just one country's call. And I think what we're going to find is these threats of tariffs are going to turn into more discussion. We'll have, behind-the-scenes discussions about better ways to do this. Tariffs are not the best way to do it. And by the way, we've already seen this when President Trump imposed steel tariffs. What we realize is the world is very interconnected, and you do as much harm to your own people as you do to imports. And so what we found is up to 55% of U.S. imports of steel now have been exempted from these steel tariffs. So I think we'll see more of that kind of that all this bluster is going to turn into more constructive discussions. This is really about the U.S. and China, not about global trade wars. I think the market fears about this are way off base myself.
Okay.
Nothing's going to stop. Nothing is going to stop this ongoing development that's going on, and U.S. businesses have a lot at stake in China, and what's happening in Asia is important to everybody. So,
James, you say nothing is going to stop the global growth, but Robert Shiller says there could be a wait-and-see attitude by manufacturing companies all the world over in terms of their expansion, and wait-and-see normally leads to recession.
Yeah, I don't think so. I think this is a classic fear of academic types. Businesses businesses can't wait and see. When the Asian region is growing 6 to 9%, if you wait and see, you're missing out a lot of business. Okay. And the clients that I know just don't think about life that way. They realize that a lot of what's going on here is a lot of it is bluster, and there are legitimate complaints, but this is not going to stop the growth and the ongoing trade.
Okay. The bigger issue for people sitting in India and economy watchers is the way Brent crude has been spiking up, James. We've now seen crude surge above $70 a barrel. Do you think geopolitical risks bearing down on the global crude market could result in a further boom in crude, over the next couple of months?
I'm a little skeptical. I mean, right now what's going on is this. The Saudis intercepting some missiles coming in from Yemen, right? So these kinds of things happen all the time. You always get nervous when you see that kind of thing happening in the Middle East. There's a lot of oil that's coming in the markets, and I think it's interesting that we've gone from too much oil to now everyone's worried about oil prices going up. I think we'll see prices are settled in this range around $60.
Around $60?
For West Texas, West Texas, that's not Brent.
All right.
Yeah.
Thank you very much, James. We do hope, of course, things cool down over there. There is also the Bolton effect and fears that he might reverse the deal with Iran on nuclear energy. That can, of course, mean even more crude can move out of the market. But we'll have to wait and see. Thank you very much for joining us, James Glassman. Let's also play out to you the quote we referred to about Robert Shiller. He warns of an economic crisis from trade war threats.
Wake up this morning with some red on the screen. By the way, the SGX Nifty has actually recovered from the lows. It's now trading absolutely flat. So let's see how things go. For sure, you can see some volatility on the screen. You're seeing it in the Asian markets as well. Our research team is here to give you the list of top 10 stocks to watch as we head into trade today. So let's welcome them. Here they are, all of them. Anuj, what are you looking at?
So, Sonia, before that, actually, sometimes it's good you get a gap down because then intraday at least there's not too much of pain. Right now, if you get a recovery and all, the problem is that you see shorts right at the start. But in terms of stocks, one red and one green. On the red side, perhaps a stock like PC Jeweler, because there was significant jump in delivery volumes on Friday when the stock ended near the low point. It's broken the 220-day moving average decisively, and the sentiment is extremely poor in jewelry stocks not named Titan because of what's been happening, and so that's why I think that one would be interesting. And this is one stock that I flagged off about 10 days back, Jubilant Food. It showed signs of ending the correction, and in a weak market, it's up 12%, within 2% of new lifetime high. Very strong delivery buying on Friday. When stocks see delivery buying close to lifetime high, you know that there's serious accumulation going on.
Okay. Well, that's a nice thought to begin with, especially when we haven't had breakfast. Mangalam, let's come to more important developments at Tata Power. That company is going to be richer because of some stock sale.
Yes, Lata, richer by about 2,000 crores. So basically, the company had denoted earlier that they will sell their non-core assets going forward. So this time they're going to sell 40%, about 40% of the stake that they hold in Panaton Finvest, which is a Tata Sons subsidiary, as well as close to 5% stake in Tata Communications. Both these investments will be sold to Tata Sons itself for a total consideration of 2,155 crores. So it will be richer by that. But remember, the company has a debt of close to 50,000 crores. So if they use to repay the debt, it will come down by about 2,155 crores.
Okay, Mangalam, thanks a lot for that. I just want to make a point here. You know, this is of course not the market of last year. If it was last year, perhaps the stock would have seen a big rally. But right now, on Friday also, the stock actually ended at the high point. And the big trigger for Tata Power would come when that whole Mundra resolution takes place. Before that, these piecemeal issues may not help much, and
that's not taking place anytime soon. That's not taking place.
And so on Friday it ended at high point, and if it starts to rally today, and if you're buying then, you are running a bit of a risk. So just
see, everyone knows that power can be resolved only if governments step in, and governments are afraid to step in because no matter what they do, they are seen as favoring groups.
Exactly.
So I mean, this is a long
exactly.
Pain.
So it's going to be, of course, perhaps may not be as big a rally, but. Nisha broke a story last week on Indiabulls Real Estate, where Blackstone was to pick up stake in their subsidiaries, and that's happened now. Nisha, good morning.
Good morning, Anuj. Yes, our news break has been confirmed. So Blackstone will be paying in total 4,750 crore rupees for this deal to buy 50% stake in two subsidiaries of Indiabulls Real Estate. Part of that is equity, that is 1,950 crore rupees will go straight as cash to Indiabulls Real Estate, while out of the huge debt pile on the books of Indiabulls Real Estate, about 2,800 crore rupees would be passed on to Blackstone. So the total enterprise value of the two subsidiaries are 9,500 crore rupees, which includes our Indiabulls Finance Center, which we see daily, One Indiabulls Center, as well as the real residential assets like Blue Estate as well as Club.
Okay. Thank you very much, Nisha, and congratulations for getting that story right. Sonal, if you could just chip in and tell us what brokerages have made of the deal and how much it might add to the stock.
Well, they are positive about it. Well, Nisha was already talking about the huge pile of debt. The debt stands at around 9,500 crores, out of which the development arm has a debt of around 5,300 crores. So CLSA, that says that this deal will not only help establish valuations for Indiabulls Real Estate, it will also help to delever the debt of the development business. Also, they say that on the SOTP basis, they have a target price of 311 rupees. And going forth, one more trigger for the company will be because the company has sought an authorization to sell some more stake in its Chennai assets. So that is one more trigger that we'll be looking out for.
Okay, positives coming in. Let's see how Indiabulls Real Estate moves in trade today. Remember, a lot of PE players have recently been interested in the rental arms of real estate companies. We recently saw GIC buy that stake in Prestige Exora Parks as well. But moving on, Manisha is with us to talk about the spike up in crude. $70 a barrel now, Manisha.
Oh, well, yeah, 6% of gains in the previous week. And even with a bit of a correction early in Asia right now, we are holding above that $70 per barrel mark. It's a tangible commodity. The demand estimates are on the stronger side. And you have the oil producers and Saudi Arabia talking about oil output cuts extending into 2019 as well. And that, of course, has been very, very supportive for the prices. Apart from that, you also have seen a decline in U.S. weekly inventories. The imports into U.S. also have declined, and that was supportive. But at $70 per barrel, we know that the U.S. rig count continues to increase. The US production would be very profitable for the shale producers. So there could be some profit taking that you could see at these levels. But if you look at the reports from Morgan Stanley, Goldman Sachs, they are looking at levels between 75 to 82 by mid of this year. But there are contradictory reports as well. But at this point in time, we of course are trading at multi-week highs.
Okay, thanks a lot for that, Manisha. This is going to be negative for oil refining companies for sure. So keep IOC, BP, HP on your radar. Abhishek, over to you now. IndusInd Bank, why is it on your radar?
Well, Lata, Satin Credit Care has made an announcement to the exchanges wherein they have mentioned that IndusInd Bank will get a board seat in the board of directors of Satin Credit Care. Now, Satin had entered into an agreement of business correspondence agent for IndusInd Bank way back on 8th Feb 2018. Satin is a great MFI player in having a presence in the northern belt of the country. Now, through this, IndusInd will have a pan-India presence because through Bharat Financial, they already have a presence in eastern, western and southern part of the country, and they have to bring a significant portion of the book to Satin in order to get a board seat. So expect green on IndusInd Bank today.
Okay, thanks a lot for that. Well, moving on, there's a huge transaction brewing in the Indian music streaming market. As you just heard over the weekend, Reliance Industries will merge Jio Music with Savan, the app that all of us listen to. Rima joins in now to tell us what the impact of that could be. Rima?
Hi, good morning. Yes, telcos are upping the competition upping the ante on competition by increasing its bouquet of offerings. So as you pointed out, over the weekend, Reliance Industries has announced that they will be combining Savan, which is an independent global music OTT or over the top app with its own Jio Music. This transaction will be valued at $1 billion. Jio Music will be commanding a valuation of $670 million. Reliance Industries will be making an additional investment of $100 million in the combined entity, and $20 million will be upfront. This audio streaming is a hot business. In fact, according to a recent report, audio streaming contributed about 10% to the total mobile internet usage in India, and Reliance Industries is trying to get into the game and consolidate its position. In fact, Reliance Industries has also been increasing its entertainment play. We know about its investment in Network 18, but recently it also invested in Eros, Balaji, as well as Roy Kapoor Films. Morgan Stanley says that this shows the company's focus to create a large offering of digital services, whether it's digital payment, OTT media services, basically leverage its growing stream of users. Separately, Reliance Jio board has also announced they will be raising 20,000 crore rupees via debt offering. This will be used for capex. Spells bad news for its incumbent players like Bharti and Idea.
Okay, Rima, standard disclaimer, of course, flashing on the screen. Reliance owns TV 18, Network 18, the companies that run the channel. By the way, just, I think the stock to keep on your radar could well be Saregama, because if, you're paying that kind of money for Savan, and so just thoughts here, you would want to keep that stock on your radar as well. The kind of valuation that music companies are getting and the ones with music libraries. So will be interesting. But let's go across to Ekta then. This fresh news on Dr. Reddy's.
Anuj, it is just brokerages writing on Dr. Reddy's. We had reported this news on Friday afternoon, or rather it had come out with regards to their Suboxone filing, which is basically an opioid addiction drug in the US. So Credit Suisse has said that Alvogen, which is the pharma company which has won basically a court ruling in the US with regards to this particular drug, reduces the best case scenario for Dr. Reddy's in terms of a launch in the US. So maybe we could see some amount of red on the stock on account of that.
Okay, our opioid is the markets, isn't it? Thank you very much, Ekta, for that. So red on Dr. Reddy's. More brokerage reports, this one on Tata Steel. Nigel, what is Credit Suisse saying?
Well, Credit Suisse continues to maintain their outperform rating on Tata Steel. In fact, they are saying that the recent dip that we're seeing should be used as an opportunity to get into the stock. They're saying, yes, the Bhushan Steel acquisition is a tad bit stretched, but in the longer term of things, it'll be a value accretive. So on the back of that, they believe that, in fact, it's positive. They've also cited that a lot of countries have been exempted from Donald Trump's tariffs. So that as well is a positive. On the whole, they're expecting a bit of a bounce from the stock.
Okay. I think an important, thanks Nigel, an important development that Nigel would also be interested in is the depromoterization of ArcelorMittal from Uttam Galva, something which the SEBI has approved. So that will mean more serious competition for SR Steel. Steel is getting interesting.
Okay, well, at a time when the market is under pressure, there are brokerages upgrading certain stocks. So let's find out more. Cadila is one of them. Ekta joins in with more on that. Ekta?
Well, two upgrades which have come in for Cadila this morning. There's CLSA as well as Nomura. I'll just concentrate on CLSA, which has upgraded the stock to buy from underperform with a target price of 450 rupees. According to them, they find the current valuations on an FY 19 and 20 basis attractive. The stock is at the pre-Moriah plant clearance levels, and fundamentals have strongly improved according to them since then. So he expects green on the stock.
Okay, thanks for that. We can take all the green that you can give us. Sonal, you have a bunch of stocks on your radar.
I'll start with NHPC. Some good news coming in there because the company has fully commissioned a 50 megawatt solar project in Tamil Nadu. Expect that stock to be in green. Huhtamaki PPL will also be in focus because they have acquired Ajanta Packing on slump sale basis at an enterprise value of 100 crores. Remember, the cash on the books of company as on 31st December is at around 44 crores and they have borrowings of around 394 crores. So that stock will be in focus as well. Sandur Manganese, the company has approved enhancement of the production limit from 7,400 tons to 32,000 tons in this year. So that stock will be in focus today as well.
Okay, thanks a lot for that, guys. So lots of stocks to look at this morning. In case you missed out on any of them, here's a quick recap of our top stocks now. Expected to gain today are names like Tata Power, Jubilant Foodworks, Indiabulls Real Estate, IndusInd Bank, Reliance Industries, Tata Steel, Cadila, NHPC, Huhtamaki PPL and Sandur Manganese. While stocks that could be under pressure today, PC Jewelers, BPCL, HPCL, IOC, Bharti Airtel, Idea and Dr. Reddy's. Let's take a break, but with the Nifty back below that 10,000 mark, how do you approach this truncated week?